O'clock. I think everything seems to be recording. So, no, we still got a few folks joining in, but that's okay. We'll let them in as they come and get started this morning. Appreciate everybody joining us again for VC Ag Today, this Thursday morning, June the 3rd, 2021. Hope everyone is doing well. Just wanted to introduce our speaker before we get started this morning. We're pleased to be joined again by Robert Harper with the Virginia Farm Bureau Grains Division. Robert's been a continuing supporter of this program and has been really generous to provide market updates for us on a pretty regular basis. I know he's joined us several times over the past year or so that we've been doing this program, and it's always a pleasure to have Robert join us and share his expertise on grain marketing updates. So thank you, Robert, for being with us this morning. I do have a few housekeeping notes as usual, just to share with everyone, and then we'll get started. If you would, please make sure that you mute your microphones throughout the presentation to try to avoid as much background noise as possible while Robert is speaking. If you do have questions or comments, please enter those into the chat window. If you have a chat window on your side, if not, if you can just hold those until the end of the presentation, we'll have some time for question and conversation. So again, appreciate you all joining us this morning for this opportunity. Robert, thank you again, as always, for being with us, and you can go ahead and get started.
Yeah, thank you, Robbie. Can y'all hear me okay? Any word out there on that?
Yes, sir, Robert, coming through fine.
Okay, yeah, good morning. And Robbie, thank y'all and everybody extension that's on the phone for putting these conference calls together and again, giving me an opportunity to speak to you. I love the opportunity to talk to people and talk to people about markets, and it feels pretty efficient to have the opportunity to do that when multiple people are on the phone. So thank you. And we got a lot to talk about. Obviously, every day we're trying to look through the headlines and see what headline is influencing the futures part of your cash price, or even what headline is influencing the basis or the freight part of your cash price. And now is not the time to sit on the sidelines and not pay attention to what's out there. And I know all of y'all do, or y'all wouldn't even be on the phone call this morning. One thing I would say too, that I hope isn't going to come across as being opposite of what I just said, that now's not the time to not be paying attention. We need to be paying attention to headlines, but we have to be very careful in a market that is this volatile of watching it too close. And what I mean by that, even myself, you all, Farm Bureau provides me and my coworker, Josie Moore, we get provided a live quote screen for the Chicago Board of Trade. We use that to trade off of, obviously, but I've gotten to the point now where I can't even keep it on in front of me all day long because of the type of volatility that we're seeing. Typical volatility now is nothing like we've even seen over the last 7 years. You have to go back to 2012 since we've seen the market move, limit moves one day and limit moves the next day. It's been a long time, so we've all gotten used to that, or we're getting used to it. But I really recommend it to the people that I get to talk to look at what the futures market has done on a daily basis. Spend time at the close each day. We know the futures trade for 17 and a half hours a day. The Chicago board closes at 2:15 our time. Take a look at what they did that day, and then at the end of our 5-day trading week, spend a little time at the end of the week, Friday afternoon, and evaluate the trends of that week. I think that'll help keep the emotion down when you pull your quote screen up and you see corn is up 20, and you look at it 2 hours later and it's down 15. It's very emotional, as we all know, and we've got to do some things to take the emotion out of it. Part of that we'll talk about later is sticking with your written marketing plan. And then another part of taking the emotion out of it is just knowing and recognizing that volatility, big change in price is here, and it's here to stay for the foreseeable future. So that's just kind of what I would preface my remarks about today, is just expect big volatility. If we go back to when this rally started in September, We know that the speculators came in, the managed money participant. That speculator is in the market to profit off of price change. You remember that old definition we have in our minds that an investor buys an asset for it to appreciate. They want to buy it low and they want to sell it high. They're in it for the long term. When we look at investors who come in as a managed money speculator, they're only present in our market to profit off of price change. They're there for price change. And remember, they want to be on the right side of it, but they can make just as much money with the board going down as they can make with it going up, depending on what side of the trade they're on, how they initiated that first position. So they're here and they're getting attracted to agricultural futures like moths to a light. And they've been coming since September. We saw them flood in April, and they're going to be here to stay because their money is yielding them profits in agricultural commodities because of the volatility. Volatility breeds volatility. So what are some of the big headlines right now? Obviously, in the month of June, we're now in the North American weather market. And it's hard to think about it like this. And I would like to congratulate all of you all the planning that's gone into this crop that you have planted way back into last calendar year, all the work that you've done to get it out there, the protectants down, the fertilizer down. Y'all set the table. Like Paul, you were saying before we got on the call here, what a gift it was to see that rain come last week. We've got the table set, but the reality is we've got 90 days, just 90 days, that's going to determine the size of the U.S. crop, really the North American crop, and Canada as well. So it's hard to think about that, how fast, how short of a time that is. It's a sprint. And so the dominant headline right now is North American weather. And boy, we know we've had weather extremes locally, like on the wheat, the count of moisture that we got late calendar year 2020, early calendar year 2021, and then many of you all went 5 weeks without any measurable rain on your crops and what you had planted or what you were planning on planting. It was an odd time. So the weather is as volatile right now, in my mind, as the future market is. And I want to point y'all's attention to North Dakota. We know when we look at the USDA drought map that comes out on Thursdays, North Dakota has been in extreme drought since back, really starting in August. And remember, calendar year 2020, we had the La Nina weather event going on. I keep it simple in my mind, cool water on the Pacific Ocean at the equator. It makes it difficult for rain to come in South America and, interestingly enough, in parts of North America. We know the weather folks tell us we're in neutral right now. La Nina is gone, but it's been very dry in North Dakota. They have gotten rains over the last 5 weeks. That was one reason why we've seen the futures price for spring wheat as well as soft wheat fall. That's because of those rains in North Dakota. But interestingly enough, y'all, they have come on, North and South Dakota. The amount of soybean acres that are up there now will blow your mind. I mean, 5 million acres maybe this year in South Dakota, 7 million, I think, in North Dakota. That puts them like number 4 or 5 out of the U.S. in soybean acres. That's a recent move that we got to be paying attention to. But remember, they had pretty widespread frost last weekend. There will be some soybeans that have to be replanted. And no joke, on Saturday, a pretty good chunk of North Dakota is expecting 100 degrees. So they've gone from freezing to 100 degrees in 1 week. The futures market is really watching that. And really, I think we have some risk premium that we've put back into new crop futures, especially soybeans. If my math is right, we're about $1 a bushel off of the November soybean future contract low that we made on May the 26th because of what's going on in that upper plains area of the U.S. So that's the dominant headline. The other dominant headline this week is Brazil, second crop corn. It's been dry as a bone down there, and all these private analysts are coming out cutting the Brazilian production forecast for this double crop corn. That's put in price support on your corn futures. So keep watching that. We know we're going to get a new number from USDA on June the 10th about what they think about Brazilian production. And then we've got futures up again pretty strong this morning. And one of the things that came out overnight, one of the last headlines I'll mention is the Global Food Price Index. We've never had a month-over-month growth, explosion in the cost of food that we saw from April to May. Global food prices are skyrocketing. I mentioned 4 minutes ago, we know this rally started in September. This is month number 9. And we know part of the reason it started is the speculators were betting on global food inflation. So they were buying futures, and it's been a self-fulfilling prophecy. The more futures they buy betting on global inflation, the higher the future price goes, and then that trickles down to everybody. So whether here in North America, whether in South America, global food prices going higher. Every signal we have, everywhere we look, says more and more inflation is coming. That's pushing prices higher. And just an amazing market out there, an amazing market. Remember, y'all have done this a long time. If you go back to 95 and 96, if you go back to 07 and 08, and if you go back to 2012, when we saw this type of gains in the market, you know, where year over year beans are up $6 and corn is up $4, counting basis. You know, we haven't seen this kind of a market since 2012. And remember one thing I want to key in on, back in 2012, humans still traded futures contracts on the floor in Chicago. But remember what you're seeing right now, high frequency computer trading, open orders, sell stops, the algorithms, the computers are doing everything. And that's another reason why you're seeing some of the price action that you're seeing. Think back 2 weeks ago when, here's an influence, right, that you just can't prepare for, these influences. That they find a crack in a bridge over the Mississippi River, Interstate 40, Greensboro, North Carolina to Los Angeles, California. It's a modern marvel of engineering. They got a bridge that goes across the Mississippi, downtown Memphis. Y'all been over that bridge. They find a crack in it, shut the bridge down. The Tennessee River Authority that manages barge traffic shuts the river down to barge traffic. And before you can blink an eye, we got 1,000 barges backed up that are coming out of the interior going to the Gulf to go to China. Everything's about China. Keep that in the back of your mind. So the speculators see that, and corn immediately falls the limit, drops 40 cents a bushel, all because the Tennessee River Authority closes the river for 2 days. They open it back up, we go right back up 40 cents a bushel. So when the computers are running things and the sell stops are in on for the bottom side, the open orders are in for the top side, we just got to get out of the way of them. You can't stop it. And we're going to see more of that. Now, a couple of things here about this high frequency computer trade. I want to talk for a couple of minutes on these couple of things. On March 15th, the Chicago, the Chicago Board of Trade, the CME group that owns them, announced that they would increase the speculative limits of the managed money speculator. And depending on what commodity you're looking at, they increased those limits by about 70%. For instance, if me and Robbie ran a hedge fund before March the 15th, we could have 30,000 corn futures contracts, 5,000 bushel contracts. We could have 30,000 of them in our account. After March the 15th, we could have 57,000. That's one example for corn. So this increase in speculative limit, March the 15th, has even drawn more speculator money into the market, which has increased the volatility. The other thing I want to mention that happened on May the 3rd with the futures part of your cash price, the CME group that owns the Chicago Board of Trade, they increased the daily limits. And y'all seen this, y'all read about this, but this is a big deal. Remember, Corn used to could only move 15 cents a day. Then they worked itself up to its price got higher to 25 cents a day. That's what I've known, what a lot of you all have known. But now corn can move 40 cents a day, either way, up or down. Wheat can move 45, and no joke, soybeans can move $1 a bushel a day, one way or the other. So having expanded limits also increases volatility, and that's what helps us feel more emotional about this market. So all of this has contributed to a phenomenon that we've seen across the Corn Belt and even here locally. We've seen commercial buyers, people that we sell to, jumping off of the nearby futures contract. And maybe this will come up when we have some discussion in a little bit. But for instance, even as recently as last week, we've seen folks who are buying old crop corn for June delivery, cash corn off of the July futures contract, roll all of their positions out of the July, skip the September, and go straight to the December contract. We've seen them do it for corn. We've seen them do it for soybeans. And in some instances, we've seen buyers roll forward on wheat contracts. They're doing this for a lot of reasons. The volatility is so present in these nearby contracts is one of them, but there are others. But y'all, this is a really interesting phenomenon, and people who've been in this marketplace a lot longer than me, 30-year type veterans, you haven't seen this before with people jumping off the nearby contract, people being commercial buyers and rolling out. So maybe we can talk about that some in the discussion. So when you put all this together and we look at funds and that commitment of traders report that we get on Friday afternoons that tells us the managed money speculators' position, how long or short they are, we've seen these managed money speculators really cut their links since the May 12th USDA report. So what does that mean? If they cut their links, that means the futures price is going lower because they were bought or they were long. So it's a lot of participants on the sidelines right now with a lot of money in their pocket waiting to make decisions as more influences come in. So keep that in your back of your mind as we go forward here for a second. So I talked a minute ago about everything is about China. And I think as we've all lived in America for the last 30 years, we've seen that. But just like we've seen consolidation in different areas of agriculture, whether it's the livestock sector, the machinery sector, or the grain buying sector, we know consolidation has a big impact on what you and I do. And we know China has a big impact on what you and I do. If we go back a year ago today, we saw futures prices at multi-year lows as demand got cut off. As we came into the fall, as we've come into this year, we've seen demand come back in an amazing way. It was that V-shaped recovery everyone talked about a year ago. What does that mean to you? It means we've got really, really tight supplies. When you look at the supply side, when you look at the demand side, and when you look at what is left over when you put the two of them together, we're extremely tight. And y'all, we're going to, according to the government, we'll get new numbers next week, but according to the USDA, the government, we've got as tight of a soybean supply balance sheet as we've ever had. So what does this mean? Even if y'all grow trendline yields this year, we have a big crop and big acres, we're still going to be tight next year. So all these headlines that can work the market, 15 cent, 20 cent one way for corn, 50 cent one way, 50 cent the other way for beans, all these headlines are still going to impact your price, but you're still undergirded. Your price is still supported on the top side for, in my opinion, really at least through mid-2022 because of how tight supplies are. So that's something we ought to be pretty optimistic about and grateful for, knowing that we've got real fundamental reasons for price support to be here at very profitable levels above your cost for a long time. And it doesn't make me sound like a genius saying that because we know we're in our 9th month of this rally already. So very, very important and to know that and have that in the back of your mind as you're making marketing decisions. So we're a little bit between right now. Remember, next week, June the 10th, Thursday at 12 o'clock, we get our monthly World Ag Supply and Demand Report. We're going to get new numbers from the government. How big is Brazil's crop? How much has China bought in the last month? We're going to get supply numbers, production side, like Brazil's crop size, and demand numbers, like what's China doing in other countries. You're going to see some volatility around June the 10th because of that report. But I'm telling y'all, and I mean it, that there's not a day this year where you're going to get a piece of information from the government that's going to make more impact on price than June the 30th. That's when we're going to get our quarterly stocks report, what was in the bin on June the 1st, and we can really see if these markets have been rationing. Remember, every month we get a report from the Soybean Association, on National Oilseed Producers Association, I should say, on how many beans were crushed, the month before. We've seen some pretty big drop-offs, especially in April, for how many beans are getting crushed, which kind of tends to make us think they're rationing, that they're spreading these beans out so we don't run out by the end of the year. What's so big about June the 30th is you're going to know if rationing has occurred. But the end all and the be all, y'all know what I'm going to say on June the 30th, is the acre number. The season that we're in right now started on April 1st because we got, from a price perspective, because we got the intentional planted acre number on March 31st, how many acres you, the farmer, intends to plant. Those are old numbers. You know, they were really low, under 90 million for beans, 91 million for corn, and the market went, oh my goodness. We're at multi-year highs on futures. Why is the American farmer not going to plant record acreage? So we saw in the month of April, corn was going up 10 cents a day. The funds were coming like moths to a light because of the volatility. We said, the market said, not we, the market, we got to go out and buy acres. We got to get this board up to 5, 6 year, 7 year highs. So these folks, men and women, will go out and plant a lot of acres. Well, you're going to find out on June the 30th how many acres that y'all planted, and that's going to change all of our math. What happens on June the 30th if y'all planted 95 million acres of corn instead of 91? What happens? We know the speculator is going to want to sell off on that, and the price is going to fall. Can they put all that money back in July or August if it doesn't rain and the price go right back up? Sure they can. But it's going to be a volatile day on June the 30th. And we got to make preparations for that. And now that it's rained, and y'all can look at what percentage priced you are on your new crop bushels, I'm telling everybody we need to make some sales on new crop bushels before June the 30th. And we'll talk a little bit more about that in a minute. The other thing you got to be looking at every week is the Monday crop progress report at 4 o'clock. We got to see what the good to excellent condition is of the corn and soybean crop. We got our first crop conditions rating, thanks to Cooperative Extension and all those folks who turn that data in every Friday to the U.S. government. They release it on Monday. 76% of the U.S. corn crop was rated good to excellent this week. And that's one of the reasons why you saw volatility or a small sell-off yesterday in the futures market, because of that excellent rating for this time of year, way above the 5-year average. So look for that on Mondays. Also on Mondays, look for the inspections report. The trade is watching that like a hawk. We know China's bought a mountain of corn. We're watching the inspections report every Monday because that report tells us how much corn China, or beans or wheat, how much we've actually shipped for the week before. You remember last Tuesday, corn fell the limit, the new limit, 40 cents a bushel, bam. And everybody's like, what in the world? What are the rumors? Everybody's in a frenzy, worked up. The rumors were that China had canceled a bunch of old crop corn sales. Now, guess what they did? Looking back, when we got the sales report on Thursday, the rumors were out there that they canceled old crop corn. The price fell like a brick. And what China did is they went out and they bought new crop corn. They can manipulate the market in a whole lot of different ways. We know they're tricky to trade with. I don't know any other way to say it. But last week, that was an important feature of the week. The market sold off on rumors, and then when the truth came out that they had actually bought corn, the market went right back up to where it was. And if you hadn't even looked at your futures screen last week, you would have seen about a 3-cent change per bushel in corn for the whole week. And we had limit up and limit down days in the same week. Remarkable. So June the 10th, crop production report. If you've got any old crop bushels left that you haven't sold, the rule of thumb is, and this is my rule of thumb, it don't mean it's right. It's just what I like to work off of. If you have any old crop bushels, the rule of thumb was the first thing you do when you go to work on July the 1st is you sell the remaining bushels you have of old crop. But I would say this year, I would like to talk with you if you still have old crop bushels that you haven't priced, and that's not a bad thing, but I think I would want to get them sold now. I would want to price them even before this June 10th supply and demand report next week, and that's another conversation. But if you've got old crop bushels, we want to get them priced, lock those profits in, get it gone, take that risk off the table, and then we can fully focus on how do we forward contract bushels that we haven't grown yet. What percentage are we comfortable with? How do we forward contract in a market that we're in right now? So I think those things are meaningful. I think it's things that you need to keep in your mind as you're watching headlines right now, as you're growing your crop and you're watching headlines, you're cleaning up old crop sales, and you're trying to make good decisions about making new crop sales in a way that doesn't add more risk to what you're doing. The last thing I'm going to mention in my comments here, just my monologue, a couple of things here. Outside influences. Remember, we've got the equity markets, whatever index you look at, the Dow, the S&P, whichever one, the NASDAQ, or even equity indexes in other countries, we're still near all-time highs. So there's a lot of money floating around, and it's going to equities like it's going to ag commodities. We know the dollar futures index that's so important to what we export started falling like a brick on April the 1st. And how amazing, y'all, and it's not a coincidence that as the dollar futures started falling like a brick on April the 1st, that we saw one of the biggest rallies we've seen since 2012 in the month of April in ag commodities. The dollar goes down, corn, wheat, and beans go up. So keep your eye on the dollar. We're still down to at low levels. Lumber prices, we know in the past we've never really compared lumber to anything that you and I grow or deal with from a corn, wheat, or bean perspective, but lumber was really the beginning of speculator money coming into futures, buying a commodity to bet on inflation. Lumber went up 3 times what it was worth. We know it's off its highs a little bit right now. And interestingly enough, you can say kind of a similar thing about corn, wheat, and beans, that were slightly off the highs that we made in the middle of May, but when the crop report came out. Take a quick look at gas futures. On January 1st, we were at $1.50. On June the 1st, we were at $2.20. And wow, what a comeback story for ethanol. Ethanol futures, the July contract, if you went back to January 1st, we were at $1.55 a gallon. And to June the 1st, we're at $2.45 a gallon. So big comeback for ethanol as people are driving profitability. Believe it or not, even with corn going up like it's gone up, there are people, many companies, well, I should say a high percentage of the companies that exist that make ethanol are profitable right now. And that's positive. We know way over 30%, you can look at it a couple of different ways, but over 30% of the U.S. corn winds up in the ethanol plants. So we need them to be doing well. And I think I'll probably just, it's 9:30. That's my part of it. I'll leave it right there. Thank you for your attention. I wish you the best caring for this crop. Josie or I are glad to talk anytime, and I'm glad for some discussion and some questions now, Robbie.
All right. Thank you, Robert. Pleasure as always. We appreciate you joining us and sharing all those updates and recommendations. We'll go ahead and open it up for questions and discussion. Robert, I just checked the chat window. I don't see any questions or anything in the chat window. So at this time, if you do have questions, feel free to go ahead and unmute yourself. If you just click the microphone in the bottom left-hand corner and ask your questions, we'll take them one at a time. All right. Well, surely somebody has a question, Robert. You did a good job. You thoroughly covered everything, give people a lot to think about, but I'm hopeful somebody may have a question or at least a point of discussion.
You must have answered everybody's question.
Robert, one thing, I know you and I had talked about this a little bit over the past month or two, but just for some of the folks on the call, I know that there was a lot of producers that were really, a little bit upset or discouraged at the fact that they had sold some old crop corn, and soybeans a while back when prices were not as good as they've been over the past couple of months. And I know you and I had talked about, the importance of knowing your price point and where profit is, and there's no shame in selling above that. So I just wanted to reiterate that. I know you kind of agree with me on that as well, but I know that that's something that's really important when you're trying to look at this.
Yeah, well said. We've all learned since we were kids from people we appreciate to never use hindsight in your life. It helps you not deal with regret. I mean, that translates to every area of our life, not even to mention marketing your production. So we make decisions. We make decisions the day we make them. When we sell bushels, when we pull the trigger, we make those decisions based on the influences we've got that day. And it doesn't matter. It doesn't matter what happens tomorrow. We're not going to be prideful if we look back and it looks like we sold at the top. We're not going to be regretful if we look back and it looks like we sold at the bottom. Nobody alive can predict the future or future's price, what a bushel of corn is worth on the Mississippi River, or what a bushel of beans is worth on the Illinois River. And remember, that's what we're doing with this futures part of your price. We're trying to predict what that bushel is worth on those rivers in the future. You can't do it. Nobody can. That's why the price changes every day. So yeah, you said it best, Robbie. If you know what your inputs are, you know what your average yield is over the last 5 years, you know where you're making money. We want to make money. That's why we're in business. Well, one of the reasons why we're in business. And when you're making sales at a profit, that's why we're doing it. And that's why we're scaling into these rallies. Nobody's selling a whole lot at one time. We're selling small percentages, and we're moving forward one step at a time. So yeah, it's easy for me to say that sitting where I do. Don't look back on your marketing, but don't look back on your marketing. Just look forward. Yeah, I've got a few numbers here about new crop that should encourage you. At the break this morning, December corn was trading at $5.81 on the board. If you look at the chart right before the May crop report, we were all the way up to $6.38, and as late as last week, we were at $5. We've put 80 cents on December corn in basically a week, and that's that weather premium coming in for what they're dealing with in Brazil and in the Northern Plains. Think back a year ago when December corn was $2 under this. Man, if we looked at 581, we would go, wow, I can't believe it. If you have not priced new crop corn yet, and you've planted your corn, it's out the ground, it got some rain on it last week, some of y'all side dressed some of it this week. If you've got some, I would encourage you to look at making some small sales that at least cover a portion of your cost of production. And then we're going to hope the board is going to go up on our big weather market, June, July, and August. Same with beans, 14.30 on the board for November, your new crop bean contract. And a week ago, we were at 13.25. I mean, that thing has snuck up on us here through the Memorial Day holiday. that we've added $1.05 a bushel. So just keep that in your mind. You've got really good levels here to make some forward sales in small increments, and give you some encouragement for all the work that you're doing and the money that you're putting out there right now.
All right, how about for 2022? What are we looking like
Yeah.
for next year? I've already started selling some, but I don't want to sell as much early as I did for the 2021 crop.
Exactly. Paul, I think you're making a good statement. Remember the old adage, if you're selling old crop, it's usually a good decision to sell some new crop. And with the levels that we see out to 2022, you know you're going to set the table. You're waiting to see on God bringing the rain. You don't know all that. It's a lot of time involved, but I'm all for making small sales for the 2022 crop. But again, just cut it in half. You know, whatever percentages you're doing for the 2021 new crop, cut that in half for what you're wanting to do for 2022. Just because you've got so much time, so many influences on it, but it's always a good idea to lock in profit. Yep.
All right. Do you have any numbers for 2022 today?
As far as
Like,
basis numbers to make a cash price,
no,
not many. Mm-hmm.
just what the price is for 2022. I know it differs for different
Yeah.
elevators.
Yeah. I'm not in front of my quote screen right now because I make too much noise talking on the phone, and I sit in a little cube with people around me. I'm sitting down here in a conference room, but Paul, you call me and I can pull those charts up and we can look at whether it's wheat, corn, or beans, 2022 futures, and I can give you a good idea of where we've been up and down and help you make some decisions on that. Yep.
Thank you.
Mm-hmm. Yeah, just call me.
Robert, I see we got one question that came into the chat window asking about if you have any speculation on what may be contained within the June 10th crop report.
Yeah. So June 10th, the World Ag Supply Board is going to put together supply and demand numbers, and I think it's going to be very friendly to price, just like what we saw in May. And I'm going to talk about that for a second. When we got our May crop report, the demand numbers came in high, everything that the futures market was looking for. But we saw an interesting phenomenon happen. We saw that the speculator want to sell futures after they got that report. And we see that in the past where they buy on rumors, they sell on facts when the facts come. I think the June report, because there's still, this I hope will answer that producer's question, because the USDA is still going to be working off of the March 31st intentional planted acre number, the low numbers, the 91 corn to 87 million acres of beans, because their supply and demand balance sheets are working off low planted acre numbers. I think it's going to be very friendly again to price. And I also think a big feature on June the 10th is going to be the USDA drastically reducing the amount of corn that Brazil is going to produce in their second crop, the safrinha crop. So I think those are the two features. The report's going to be friendly, not going to be any surprises in it, is what I believe on the production side. And I think it's not going to be a surprise that the government, USDA, is going to drop Brazil. Now, what's going to be the wild card, though, is how do the speculators trade it? Have they already built all that in? For instance, we know the private analytic firms this week have all dropped their Brazil corn production numbers. Maybe that's why corn has rallied 80 cents a bushel in the last week. Remarkable. Maybe they've already factored it in and there won't be volatile price action on the 10th. Oftentimes, the June 30th stocks and acre report can overshadow the crop report on the 10th. And we might see that again. I think we'll get friendly numbers, but we'll just have to wait and see how the speculators are going to trade it. That was one reason why I made the comment a few minutes ago. If you've got old crop bushels, if you go off of that old rule of thumb that you're going to sell them all, whatever's left by July the 1st, that's one reason why I made the comment that I would just want to go ahead and get them sold now, get them priced. You might not deliver them till July or August, but I would want to get them priced now. The other reason, if you folks, anybody has old crop bushels in the bin, is to get them sold now, is that people are rolling off of the July futures, both on corn and on beans. And y'all are looking at the futures board and you see the big upside down inversion between the futures contracts. July corn is at 677. September corn is at 595. You want to sell your old crop bushels off of the July, whether it's corn or soybeans. That's another reason why I would say sell those old crop beans right now, because next week you might look at and they aren't buying them off the July futures anymore. So June 10th is a big deal, and we'll wait to see how they trade it, but I think we need to get the old crop bushels priced before then.
All right, any final questions or thoughts this morning before we finish up? I know we're approaching our time limit, so just open it up for one final call. All right, well, I don't hear anything, so again, appreciate everybody being with us this morning. Robert, thank you as always. Always a pleasure to have you join us. I'm sure if you think of questions, just get those to the agents on the call or Robert himself. We'd be happy to pass those along and try to get you answers. So thank you again, Robert, for being with us this morning. Really appreciate your support.
You're welcome.
Thank you, guys.
As always, just a few closing comments for the program. This has been recorded this morning, so we will be posting that link to our YouTube playlist for VC Ag Today. You can find that on the actual playlist. Also, if you've been with us this morning or for a past version of VC Ag Today, if you could just click on the evaluation link there on your screen and help evaluate the program. Also, if you have a topic of interest that you'd like to see featured on VC Ag Today, you can provide that as well in the evaluation, and we'll be happy to host that on the program. So appreciate everybody doing that. As always, just like to thank the team of agents that make this effort possible. Trent Jones, Stephanie Romelchek, Laura Maxine, and Frank Long. Also would like to have a special thank you to Mr. Mike Broadus in Caroline and King George counties. Mike will be leaving us here pretty shortly from Extension. So Mike, we really appreciate all of your support of this program over the past year and all your contributions to it. So thank you a whole lot, and we wish you the best of luck in your future endeavors. Also, we'd like to thank two of our summer interns and welcome them. They've started with Extension here very recently this summer. One is Claire Talamy in Westmoreland and Richmond County, and the other is Sarah Hallam in Hanover County. So welcome to those two, and we'll be having them join us on several of our sessions this summer. So thank you for being with us and your input as well. So with that, we'll close out this morning. I hope everyone has.
Well, I got one question, Robbie.
Yes, sir.
Paul. You did some yield estimates on wheat last week.
Yes, sir.
Somebody did. What did y'all find out?
Overall, Paul, it was very encouraging. I think the group that I was with here in the Middle Peninsula, I think our overall average ended up being somewhere around 70 bushels. We visited a few fields that were certainly a bit higher than that. A few fields that were a little bit lower, but overall it was pretty encouraging. Trent and Stephanie, I think, are on as well still. They maybe provide some feedback from the Northern Neck group.
All right, that sounds good. When I forward contracted, I was up to 45 bushels to the acre, and I was nervous. I didn't think I was going to make that all winter.
Yeah, we were pleasantly surprised, Paul. Certainly, there were some fields on some sandier soil types that definitely needed the rain a couple of weeks ago. All of it really needed it, but I think if things hold together, we certainly ought to be able to get 70 bushels in many areas.
All right, well, that'd be better than my average the last 2 years. So, been a tough crop to grow around here for the last 4 years. I know that.
Yeah, it's definitely been very challenging.
I
All
expect
right,
to see a whole lot of acres planted this coming year, and I don't know if there's going to be enough seed available. With the prices that are available now, I've already been selling, $7 wheat for next year.
Yeah, that's the encouraging thing. At least the market is up. The flip side is we got to have favorable seasons, and that's been a challenge the past few years.
Well, people better contract seed early is all I can say. Because I know David Hula had 600 acres, he didn't get in, and Arthur Duke had a couple hundred acres of seed wheat, he didn't get in because of the weather conditions last fall.
Yeah, it was tough for a lot of folks.
All right, thank you guys.
Thanks, Paul.
Yeah, take
Appreciate
care.
you joining us.
Yeah.
All right, appreciate everybody joining us, and hope everyone has a great rest of their Thursday.